What's up, traders? Matt from the Trade Brigade here doing a technical analysis on our FANGMAN stocks. That, of course, stands for Facebook, Apple, Netflix, Google, Microsoft, Amazon, and NVDA. We're going to kick things off here with Facebook. And by the way, as always, on the left-hand side, we have the daily, and on the right-hand side, we have the 30-minute intraday time frame. So, Facebook, what do we have going on here? You can clearly see today's candlestick is an inverted hammer. That's a bearish indication, right? We essentially had a fake move from the buyers, knee-jerk reaction off of these lows. The sellers hammered it at the higher price. We were not able to crack the prior day's high, Friday's high of last week. We were not able to break the resistance trend line, and we closed extremely weak down below at the lows of today's session, and actually right at this sort of flush point here around 186.50s, we'll call it, just for round number 6. So everything about the daily chart is screaming bearish with the lower highs that are continuously being produced, the failed move to the upside on today's session, and we also obviously have this flush point in play, equal lows. If that breaks, we know that the target underneath us is coming in around 174 from the weekly time frame. So it's not looking good here on the daily if you're sort of monitoring for reversals. So if we take a look at the 30-minute intraday, what else can we learn about today's action? Here's your sort of move in the morning, fake out with those upper wicks, never really getting too much acceptance over that 191 shelf from Friday, and clear lower high into the afternoon, right? So to me, there's really not much to do in here. Don't get me wrong. You can take day trades. That's fine. That's sort of outside the scope of a video that's, on a 30-minute time frame chart. Obviously, the market's not open either, so we can't really talk about that. But in here, day trades kind of only. I would really be patient. 190 doesn't really strike me as the level anymore, even though it was to the tick almost the lower high into the afternoon. It's got to be here, right? And you can see that, if we flip tools, that's the level that needs to be recaptured. If it's not, it's pretty historic. Look at that, 191, right? If that can't be recaptured, then we're just chopping around, and eventually this is just turning into massive daily bear flag consolidation. If that doesn't break, obviously that's even more of a bearish outcome, considering that, if we were to take the 38.2, and let's just do it for the sake of being thorough here. If we just look at the 38.2 here, anything that really happens underneath this set of lows around 212.50 is nothing more than bear flag consolidation on the daily time frame, looking like this, looking for follow through out of that. So obviously, if it remains underneath 191, that's nowhere close to the 38.2, right? Kind of goes without saying, but you get the gist, right? This is in a fairly bearish location as of right now, even on the short term, giving us these continuous lower highs and equal lows into, the remainder of the week, quite frankly. So watch for breakdowns of 186.85 or 50 rather, excuse me. And if it's going to flip bullish, it's got to break out up above 191 and probably reclaim the daily resistance trend line as well. If it can't do that, if it kind of gets here and gets stuck, gives us another, thing that looks like this for an equal low, really bearish indication, right? So if it's going to be bullish, it's got to break both of those pieces of overhead resistance, trendline and 191, and then maybe, just maybe, we can look for a move into these highs here, reattempt the lower high that was set around 200, and maybe, just maybe, that gives us a bit of a daily double bottom setup, okay? So that's Facebook in a nutshell and what I would be watching out for into the remainder of the week. Next up, we're going to take a look at AAPL for our infamous good friend here, Apple. Big breakdown, right? So what's concerning about this one is the fact, well, one, you can see that my alert was never triggered because we did not fill the gap overhead, and instead, we broke down and closed underneath the February invasion day lows. So that, to me, is a fairly bearish indication. Some of the gap filled, not all the way. And again, you can see from the daily perspective, there's your inverted hammer. That's, of course, got bearish implications. Fake move from the buyers. Again, weakness, not being able to close that gap all the way. Sellers take over and consolidate weak into the afternoon here. Doesn't look good for any sort of reversals, all right? So in Apple, what do we have for supports underneath the low end of this prior bull flag right here is roughly 148, we'll call it for round number sake. I would be watching that into tomorrow's session, see if we get any sort of response from the buyers there. It could also be a little bit of a zone, counting that low from the green candle in here as well, 146.50s maybe. So give it about $1 worth of wiggle room as we approach that level, and just be monitoring for reversal patterns. I'm not saying it has to reverse there, but if you see a pattern at that area and maybe the broad market starting to make a turn to the upside, Apple might be a good candidate for a reversal off of that support, noting that we've made this new lower low. We can essentially fish for a bit of a lower high to form on the daily time frame. So daily, not looking good, bearish implications to the upside. If we do crack the high of the afternoon consolidation, I would, there we go, and that's going to be 150, by the way. If we can crack that, I would just look for today's high of day and then monitor to see if we can fill that gap all the way closer to 155. Does it look like a likely scenario as of right now? Not really, but it would just be a level I would want to know about on my chart. So again, that's 150. If we can get a break back above, target today's high of day, roughly 154 even, we'll call it. it, just for round number's sake, okay? And then maybe, just maybe, the gap fill up closer to 154.50. So that's Apple in a nutshell, but of course the sellers do look to be in firmer control. So FAN is NFLX for Netflix. What do we have going on here? Zooming in on our daily. Really bearish. I mean, obviously cracking underneath this flush point here, you can clearly, use this as a set of lower highs now. We talked about this in the weekly watch list video. There's really not a whole lot of support in Netflix until we come to 307.50s. So we're kind of in no man's land, right? I would monitor for continuation to the downside. If we do get any sort of dead cat bounces into the remainder of the week, I would be sort of skeptical of longs, obviously, but watch for any sort of double tops that happen on the smaller time frame. So 30-minute, 15-minute, 5-minute on the back test potentially of 340.65 if there's a dead cat in the first place. I'm not saying it has to unfold that way, but if we were to get something that looks like this, there's your break and retest. Get short if you see those patterns around this area. Stop goes just above. Target first the equal low, and then obviously monitor for continuation. So Netflix not looking so hot here on the daily time frame charts. If it's going to make a stronger reversal to the upside, just like in Facebook, we do need to see a break of this daily resistance trend line, as well as probably a recapture at minimum of this level right here, this 352.65, coming from the low, the 2 days of support right there after a little bit of a fake break, right? But if that's recaptured, and we can also break the resistance trend line and give ourselves a higher low, maybe there's a reversal. But again, does that look likely based on the daily time frame chart? Absolutely not. Absolutely not, right? What we're going to do with our Fibonacci's is a little bit different. We're going to come in from the top of the breakdown here all the way to the low of today's session. And where's your 38.2? You'll notice it's just barely above that 340.65 flush point. So anything that really happens down here is just bear flag consolidation. Look for that follow through to the downside. Another excuse to really be looking for those reversals. So double tops, inverted, or excuse me, not inverted, but regular head and shoulders. Anything that is just a plain old inverted hammer, correct? Short under the lows, stop over the highs. Look for something like that. So Netflix obviously skewed towards the bear side. Let's continue along. FANG for GOOGL. What do we have going on in the Goog? If we zoom in, we've got to pop on our levels. There we go. You can see that this is turning into a flush point. So 1, 2, we'll basically call that 3, 4 touches, especially getting closer in proximity of time towards the most recent ones, especially after consecutive lower highs coming into it. It's not looking good. This 2,500 number, we'll call it for round number's sake, is starting to become a flush point, and our downside targets are going to be 24.50. So easily a $50 move available over the course of a day. And then anything underneath that, we're watching for about another 100-point range to the downside to get into our next support at 23.50. Just to give you an idea of where those are coming from, if I scrunch up the chart and just make it a little bit more pretty so we can look at it, there you go. So prior resistance led to a breakout, held on the back test here. That's your 24.50. And then in here, it's the break pullback low at, again, 23.50. So that's where those numbers are coming from. Those will be important if we get a break of this big sort of descending triangle that we're putting in here on the daily time frame chart. So zooming in, again, here's your descending triangle. Lower highs, equal lows should lead to some sort of breakdown, especially with the momentum that it looks like it's kind of picking up here, right? You can see 2 really big bodied red days. Again, maybe we get some sort of dead cat bounce as long as it remains underneath that 25.50. Bear flag consolidation, something that looks like this. Look for the follow through to the downside. If we zoom in on the 30-minute, again, you can see here's your double top. There's your neckline breakdown. Aggressive selling steps in. We'll come in with the fibs from the high down to the low. And your 38.2 is 25.70. From the daily, again, I would sort of look for anything down here. You can see why. There's your support, then flipping to resistance, then support. Obviously, we get that sort of wacky gap up last week, which throws things kind of off, but you get the gist, right? Anything that happens underneath there, the bears kind of look to be in control, getting us consolidation closer to this flush point and an excuse for buyers to start to fold the cards and say, you know what, we're out of here. And when you lack buyers and the sellers can easily step in, that's when you get that flush point, right? So anything that remains underneath 25.50 is the most bearish outcome here inside of Google. Anything that recaptures it, again, what are you going to do in this area, right? Where are you going to trade? Maybe if we put in an intraday setup that gives us a higher low, bull flag on like a 15 or 5-minute time frame, that's fine. My first target would be here. I wouldn't really push it to the upside, right? So let's go ahead and put these levels in. That would be the first target. We're going to remove that, and you can see why, right? Resistance, support, support, support. That's your first target, right? Thin structure on the way down. That would be sort of how I would look for this one to unfold to the upside. But based on what we're seeing on the daily, bears seem to have a firmer grasp here. So that's G. Next up, FANGMAN, M for MSFT. What do we have? Oops, we want the T for Microsoft. There we go. And what do we have going on this chart? Breaking down out of the 3-day balance. Okay, so this one is a little bit more playable based on the action that we're seeing here. Ideally, you would have caught it on the re-exit here, because quite frankly, we were watching this in the Discord. At first, it was look below and fail on the morning, right? And then we were going to target the top end of the range. It never happened. We got about midway, and then we roll back over, obviously with the broad market. So on this fake move back down underneath once again, that was the ideal short to get out of the 3-day balance here. And now we're looking for downside into roughly 271.65. So this is still in play. You are looking for these lows in here. What you could do now, if you're not already short on the break of today's low or whatever it was in here that fit your criteria, I would watch for any back tests and then roll over, right? That would be a break, retest here, look to get shorts. Once again, I know I sound like a broken record, but your double top is in play here. Your head and shoulders is in play here. Anything that you can get short against that 280.85 roughly area is good for a back test, and then roll over for the equal low here on the daily, getting us into that 271.65. So that's what I'm seeing in Microsoft. If it does want to pop back above, oops, let me zoom in on that once again. If it does want to pop back above, this time I would not really take it long here, looking for the look below and fail, target top end of the range. I would want to see, sure, the look below and fail, but I would want to see some sort of higher low be produced above that level if it's going to be a long and we get some sort of turn in the marketplace. I would want that extra piece of confirmation here inside of Microsoft. And obviously, as we pointed out, target is technically the top end of the range, but given the fact that we turned early, I would start targeting this, right? The midpoint of the range at 285.50, all right? So that's Microsoft in a nutshell. It does look more bearish than bullish. I think we should end on that just because obviously the state of the chart. So that's Microsoft. Next up is AMZN for Amazon. What do we have for the A in man? Filling the gap, right? So there's your split news gap up. Filled it on today's session. That was the trade that we were essentially looking for in the weekly watch list, and we got it all in one day. So now the question becomes, do we get a gap fill reversal and give ourselves a higher low on the daily time frame chart? That's definitely something that could start to unfold here. Again, the bears seem to have the upper hand based on this. I hate that. Let's zoom back in. There we go. Geez, one more time. This time I won't press the button early. There we go. So there's your bear pennant, right? So the bears do seem to have the upper hand, getting consolidation, price acceptance lower inside of the gap, and potentially coming for the breakdown of the bottom of the gap at 28.10. If it's going to be a gap fill reversal at this point in time, I would really be patient for a break up and over 28.60. This is a micro scalp, right? This is not a overstay your welcome type trade. I would target the top of the gap here, 28.80. Again, this is something that a 5-minute scalper, 2-minute scalper is looking for patterns for. And then, only then, I would take off 3/4 of the position and then maybe monitor for continuation into the low here from the flush point, right? You can clearly see this shelf of support when that breaks. That's where the aggressive selling comes in. That's 29.08. Okay, so again, a setup for someone who's really astute on an intraday setup basis, break of this level, bull flag that gets put in, some sort of setup, there's your first scalp into 28.80, and then from there, you're monitoring for continuation, trailing your stop loss higher as we come into that flush point. That's the long trade. To the downside, if we just get consolidation here and we never break that high, obviously your breakdown point is the bottom of the gap, 28.10, for a rotation into these lows, essentially the invasion day lows, the equivalent of the most major low that we have on many of our charts here in Amazon is 2,700. Okay, so that's downside. Let's wrap up our FANGMAN with N for NVDA, NVIDIA. What's going on in this one? If we take a look, breaking down out of the 3-day balance right here, coming in for an equal touch in short proximity of time of these lows, right? What does this look exactly like we just looked at? Right? I forget what ticker it was, maybe Google. Regardless, it's looking bearish, right? We have tests in short proximity of time. We have continuous lower highs coming in. To me, 209, 210, big flush point area. If it breaks, the target underneath is 196.23. Maybe 200 psychological acts is something, but our structure is really here. And then after that, it really opens up into roughly 179. So NVIDIA breaking a very important support trend line and breaking down out of a consolidation range. If I do something like this, let's actually just go to a weekly so you can see that support trend line origin. Here it is, very historic, right? We were starting to respect it here. If that cracks, you can easily see how we could move lower into those targets. We were getting compression of range with the lower highs as well. It's not looking fantastic for upside in NVIDIA. If we do get a bounce off of 209, obviously nothing major happens and we're still just looking for that break and retest off of 219 on the 30-minute time frame, right? So anything that does this, look for another lower high to be produced here. I don't need to say it. Double tops, head and shoulders, you get the gist. Stop goes here, enter under the pattern lows, look for the equal low at 209, and then monitor for continuation for the daily breakdown of the descending triangle, a flush of 209. So that's ultimately what we've got in NVIDIA. If it's going to be long, just like what were we saying, maybe it was Microsoft, it's got to be a pullback and higher low above the 3-day balance lows if we're going to get a long trade here to trigger, I would want that more, extra step of confirmation. So that's going to wrap up our FANGMAN companies. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.